it can still work as long as you've got your money parked in the right spot. Well, this is kind of a contrarian view, correct? Because you think with rates going up, it's not the place to be. What do you see in the market that's a little different?
Well, I think when you look at the indexes that are constructed for dividends, you find that most of them didn't perform very well. But that wasn't necessarily because all dividend-paying stocks didn't perform well. That was because they were focused in the wrong sectors. They were focused in those non-cyclical sectors that have very stable dividend policies, but when rates start moving up, those tend to get hurt the worst. So, we feel that the dividend growth sectors are the places that you should be.
And what then is a dividend growth sector?
So, for example, technology has grown its dividend, just the S&P 500 technology sector, by about 36% over the last 3 years. Financials have grown their dividend by about 26% over the last 3 years, and that's an annualized rate. And we think those two sectors going forward will continue to sort of maintain that trend because they've got a lot of cash, they've got a lot of growth prospects, and the financial sector, especially as rates rise, the yield curve steepens, and that's good for their net interest margins.
Technology is a little strange, right? We never thought we'd have tech companies paying dividends. So you think it is a lasting trend? Will it be beyond some of the big name companies that pay out?
Yeah, so I think as these companies hit maturity and they really have so much cash on their balance sheets, they've got very low debt ratios, and the largest, more mature companies especially, but some of the smaller companies as they mature will also begin paying dividends because I think mainly because investor preference. Investors want dividends at this point in the cycle.
So you have a technology dividend fund. Can you only hold companies that have actually paid out, or do you hold any names that might pay out in the future?
Yeah, so the way that the index is constructed is that it actually rebalances on a quarterly basis, at which time names can be added to the portfolio, but they have to have paid a dividend in the past. So we're not looking to guess who's going to pay a dividend. It actually has to have proven itself and paid a dividend.